The Fraser Valley real estate market has officially shifted into buyer control. Prices are sliding, listings are stacking up, and sellers are losing leverage fast. Even though the number of sales jumped up 17% from September, we're still 16% below last year's pace and nearly 20% under long-term averages. That kind of imbalance means the buyers who are active right now hold all the cards. If you don't understand what's happening in this market, you could waste weeks trying to sell a home that's overpriced, or you could miss out on deals that won't come back when the market turns around. So in this video, I'm breaking down exactly what shifted in October, what's driving it, and how to position yourself whether you're buying, selling, or investing before the next big move. What's going on, guys? If you don't already know, my name's Alex Dunbar and I'm a local realtor based out of the Surrey, Langley, and Fraser Valley real estate markets, and I make videos just like this every single week. So if you find any sort of value today, make sure you hit that subscribe button. And getting right into it, last month the theme was about softening prices and a growing supply of listings that created more negotiating room for buyers. That trend continued in October, only this time we finally saw some life return to the market with higher sales activity. But make no mistake, this is still a market that heavily favors buyers. Let's start with the headline numbers for October. Across the Fraser Valley, amongst all property types, there were 1,123 homes sold. That's up 17% from September, so activity did pick up a bit, but we're still 16% below where we were last October and about 17% under the 10-year average. Even though sales are climbing slightly, we're still well below normal market levels. On the contrary, new listings pulled back, down 14% from September to 2,967. This is a typical seasonal slowdown that we see in the fall as many sellers wait for spring to relist. Active listings ended the month at 10,121, which is down 4% month over month, but still 15% higher than this time last year. That tells us that inventory is staying elevated even as fewer new homes hit the market. As far as prices go, the composite benchmark price for the region sits at $919,900, down 0.7% from September and 5.3% year over year. The average price across all property types came in at $987,199, which is basically flat, up just 0.1% from last month, but still 3% lower than a year ago. Breaking it down by property type, detached homes are now sitting at $1,411,900, down 0.6% month over month and down 5.1% year over year. Townhomes are at $786,000, down 1.2% from September and 5.6% year over year. Apartments sit at $506,400, down 0.8% month over month and 6.8% compared to last year. The sales to active listings ratio is sitting at 12.9%, which technically is actually considered a balanced market. However, I would definitely argue that we're leaning more towards a buyer's market. And breaking it down by property type, detached homes are at 11%, townhomes are at 18.6%, and apartments are at 12.4%. This means that detached homes and condos are in more of a buyer's market, while townhomes hold a bit steadier and are considered more of a balanced market. For context, anything between 12% and 20% is considered balanced, with anything over being considered a seller's market and anything under a buyer's market. Now, I would definitely argue that we are still leaning more heavily towards a buyer's market than it may appear, and you can't just base everything off these specific numbers. There's a little bit more to it, but it definitely paints a pretty good picture. And finally, looking at the average days on market, which essentially highlights how long homes are taking to sell, they are taking a little bit longer. Detached homes average 42 days on market, townhomes 37 days, and apartments 42 days. That's roughly a week slower than what we saw at the same time last year. And while we're seeing the same pattern across most cities, there are a few standouts. Certain pockets in Langley and Abbotsford are showing some emerging value. Detached prices are off roughly 5%, and inventory levels there are some of the highest in the valley. Townhomes and condos are under more pressure in Cloverdale, Surrey Central, and parts of Maple Ridge, where listings have outpaced sales for several months straight. And the condo market in Whalley or Surrey Central is definitely hurting more than others, so if you're looking for a deal, this is definitely the spot to go. So what's driving this? Well, it's a mix of a couple different things. You got higher supply, cautious buyers, uncertainty in the market, and just overall market fatigue. Despite that 17% sales bump, activity is still well below normal for October. Buyers are only acting when something is priced right. They're looking for deals and they have no interest in competing or overpaying. Prices are down about 5 to 7% compared to last year, but in context, this is a controlled correction, not a crash. Sellers who adjust quickly to the new pricing reality are still selling successfully. However, you definitely have to be either the best listing for your property type and area, or if you don't show the best, if you're not that 8, 9, or 10 out of 10, then you have to be priced the best. So for sellers with over 8,000 active listings, you're competing for attention. Generally, when we sit around 6,500 listings or more, this is going to give us more of a balanced market. And as we climb above that number, that's where we head into buyer territory. Aggressive pricing and strong presentation matter. You have to make sure that your listing stands out through professional photos, staging, and a data-backed pricing strategy. Not only this, you have to make sure that it's available for showing. If there's 10 other homes that a buyer wants to look at and you're very limited on the time that you're allowing them to come and view the property, you're not helping yourself. Gone are the days where you could just throw the listing on the market, have a couple of photos, and get multiple offers and an over-asking price. You need to make sure that your home is always looking its best. It needs to be clean, it needs to be presentable, it needs to be staged. You want people to walk in and have a fantastic first experience and be thinking about your home out of the other 10 that they just saw. And that means it could take a little bit longer to prep your home in order to bring it to the market looking its best, unless you live like this on a day-to-day basis, which honestly just isn't the case for most people. And if you're planning to just test the market to see what's out there, this isn't the time for that, especially as we head into the winter. Now, for buyers, this is your opportunity. There's more choice, more negotiating room, and you're not running into multiple offers. It's always a good idea to focus on homes that have been on the market for more than 30 days. Often that's where the deals are happening. And where I personally find you can get some of the best deals are those that structurally are very sound, but maybe just need a little bit of cosmetic work. So what I mean by this is they don't show 10 out of 10, but in reality, they're structurally sound and it's just gonna take a little bit of paint, maybe changing the flooring, or maybe it's just a messy seller that isn't presenting their home in the best possible light. And if you can look past some of these minor issues, that's where I'm seeing the deals, whether that's $20,000, $30,000, or $40,000. You may have to paint or change the flooring, or in all honesty, some homes are just not clean, not tidy, don't show well, and you're able to save because of this sole fact. So what may be a $5,000 or $10,000 fix could end up saving you $30,000, $40,000, or $50,000 on the price. And in terms of the time of year and seasonality, as we're into November and heading to December and January, this is where I find the most motivated sellers. Because in reality, most people that don't have to don't want to be selling their home at this time of year. And if you look back historically, some of the best deals are always found in the months of November, December, and January because of the fact that this is when we have the most motivated sellers. Now, in terms of investors, we're still seeing the majority of them on the sidelines, but some of them are starting to return. Rental yields are starting to improve across all markets and especially in the Langley, Surrey, and Abbotsford areas. These submarkets are where price softening meets strong tenant demand, which is a rare combination. Although rental prices have come down and there is less rental demand, in the areas that are still popular and still have higher demand than others, things are starting to make a little more sense. If you've driven through areas like Willoughby or Clayton lately, you've probably noticed how many for sale signs are still up and how many are starting to flip to sold. It's a reminder that even in a buyer's market, well-priced homes do move. With cooler weather and the holidays approaching, this next stretch usually brings the lowest listing volume of the year. And as mentioned, that's when serious buyers often find the best opportunities. But what you will notice is that there will be less new listings coming to the market, so less to choose from, but better overall opportunity. So if you are planning to buy in the near future, and more specifically have an opportunity in the next few months, you have to make an important decision. Because even though I'm saying there's going to be less to choose from, there are a ton of listings on the market. And while inventory will climb as we head into next year, so will demand, and it's hard to say when the market's going to turn around. Plus, as we get out of the winter months, there's going to be less of these extremely motivated sellers. But in reality, I don't think there's any sort of massive rush. I just wouldn't wait too long. So to sum it up, the Fraser Valley market in October leaned heavily towards buyers. Prices are modestly down, sales ticked up slightly, and inventory remains elevated. Now, if you're interested in a detailed breakdown of your neighborhood, or you want to discuss strategy heading into next year, you can book a call with me in the first link in the description at a time that works best for you. If you found this video helpful and want to see more in the future, make sure you hit that subscribe button. Thank you so much for watching, and we'll see you in the next video.